So back for this afternoon's sessions, and this afternoon we've got maximising customer engagement, and then after them we've got the impact of AI in collections. So we'll talk about that. So the first one is maximising customer engagement, and with me on this one here, we've got Matt Cochrane, who's the Chief Operations Officer at Fairlo, Neil Costello, who's the UK Marketing Director at Lowell, Arren, who's the Managing Director at Digital DRA, and John Ricketts, who's the MD at Ardent Credit Services. And I say this one here, we're going to talk about maximising customer engagement. And as we say, collections, and we've heard this morning, collections is really about engaging. How do you engage the customers? And that's how you then start having the conversations. And there's new communications methods, tools, technology, and everything that we'll end up talking about. So I don't know if the panelists want to come up and just maybe take a seat. I think we need an extra chair, actually. I think we need one more chair. Oh, thanks, Colin. I'll try not. So you've got John, Arren, Matt, and Neil. So welcome to you all. I suppose I wanted to start off just by sort of framing a little bit about customer engagement, and sort of we've all been on this journey over the last. Goodness knows how many years, probably like 30 years if I go back, I'm probably that old, around how customer engagement's changed from a technology point of view, but also from a psychology point of view. And I suppose, John, really because you're at the end, I suppose, how have you kind of seen that, so I suppose, fundamentally change over the last few years, and what do you think some of the lessons are that's kind of emerging?
There's been a lot of talk about vulnerability so far today, and just in the interest of full disclosure, I am a Man United fan, and I am feeling particularly vulnerable this morning, so please be gentle. I've been in this industry for 45 years. In the last 30 years, really customer engagement hasn't changed. It's not one-dimensional, it's not three-dimensional, it's four-dimensional. You're looking at telephony, letters, digital, and face-to-face. What's changed is the ratio of that engagement. To turn the clock back 10 years ago, we'd have been sending 10, 15 million letters. Ardent now sends 20 million emails, 20 million SMS, and 2 million letters. We're also now getting excited about trialling again face-to-face with Perch Verify. So it hasn't changed. What's changed is the ratio split of those communications.
Yeah, and I suppose, Matt, I'm kind of interested in your kind of view, sort of like with your space in the lending space. I mean, like, how do you find the interaction sort of with your customers is sort of changing?
Yeah, so we're a relatively new company. We launched in Sweden in 2018, and we've built everything from a digital-first perspective. So customers can do 95-97% of actions themselves just by logging in and self-serving, and that then frees up our customer support to then be able to engage on the more complex cases. So it's kind of a little bit to what you say in terms of how the ratios of how that's evolved over time. We've built the platform to be able to cover the engagement itself rather than needing people power behind it to drive that.
Yeah.
And actually that links in with what you guys do.
Yeah, I mean, Arren, I suppose I'll come to you next, I suppose. As much as we've got the channel side of things as well, but it's also the psychology around, like, how do you think customers want to interact with their financial institution? Do you think that's kind of changed as well in terms of driving some of this outside of the pure channel elements?
Yeah, I'd say so. I think with us, when we first launched, we were digital only. Now, it was digital first, but to give an example of what we do, we get about 72,000 cases a month. We do about 20 calls a day. How people engage with us is massive, and the way they tend to do it is, so for an example, we've onboarded 3 clients in the last 9 months that have never worked with debt collection, and we're like, how we position ourselves is really key. Often we've got options that our clients don't have. And also if we bang the same drum about, oh, you've not paid, they already know that they've not paid. It's like how we position ourselves, what their options are, speak to us, we're here when you're ready, and that kind of theme really helps with getting the trust early on, which in our industry is not a lot of trust.
Yeah, and Neil, what's your kind of view? I suppose we were just chatting before around some of the survey work you've done, I suppose, as well, and like how to get out there and so I suppose like target people and build kind of trust to try and get them to engage. I mean, is that a significant factor in getting people to engage?
Yes, absolutely. So when I joined Lowell, hands up who knows Lowell? I always ask this at conferences. Oh God, about half the room, that's good. So we talk about ourselves being the biggest brand nobody's ever heard of because we've got 1 in 5 UK adults as a customer of ours. But the engagement rate is it's this permafrost of about 20-25% of customers get in touch with us. Now we've shifted a dial massively towards digital over the last kind of 4 to 5 years or so. And the kind of misperception almost within the business was, well, a customer is not going to pay more online than they will if they ring you because you need to have that human interaction, which you absolutely still need to do. I think the industry, whilst I've been in it, so my background is banking and insurance and pensions and all that stuff, since I've been in it, I think in particular, we were talking about consumer duty, weren't we? I think that's moved the industry on brilliantly, but customers haven't necessarily caught up with that in our part of the sector. So when we do our research, most of our customers have been in a debt cycle for 10, 15, 20, even 30 years. And so that mistrust is embedded deeply. And so I think our part of the sector needs to do something significant to break that. And I do think that's more about marketing what we do.
Yeah, and I suppose, as the consumer, we were talking a bit about, I suppose, consumer outcomes and consumer duty, I suppose, focusing on good customer outcomes, which the industry's made a huge progress on, but whether that's perceived within the public. I mean, I'll go back to you, John, I suppose, and just in terms of like, how much more as an industry do you think we need to do, and how much do you think that can help in terms of having more positive engagement, and when you do phone, that people actually pick up because they're not scared to talk to you? I mean, is that still a major issue, do you think, in the industry in terms of getting hold of people to offer support?
I think there's still a barrier to engagement, and there's also a part to play through social media in terms of that barrier. It's very easy to give a debt collection agency a kicking on Google reviews or Trustpilot. Mm-hmm. And part of the, I think, responsibility of the industry is to actually positively engage with review platforms like that to improve the scores, because it's surprising how many customers, they look for validation through social media of the contact. And when they find poorly worded reviews where a customer is taking the opportunity to criticise the DCA for doing no more than getting in touch with them, it can do more harm than good. So I do think there's a responsibility on everyone in our sector to actually improve their Google and Trustpilot scores, very much so, and a lot do. It's surprising how you see in this industry, in debt collection, how you are seeing 4.5 green stars on Trustpilot. Our CSAT reviews, we as a whole, we've sent, since 2019, I think we've got about 60,000 responses to our CSAT reviews. And we are regularly seeing approval scores on those CSATs of 90-92%. But that doesn't reflect in our social media reviews. And that's a big element for us. Yeah.
I mean, and Arren, I suppose, in terms of like modes of engagement, and so like, I mean, are we keeping up enough in terms of like being able to engage with people using the most modern technology or the most modern forms of engagement? Has that fundamentally changed in terms of how we want to interact with our providers, do you think? I mean, I know you've done quite a bit of that in terms of like, not only just the channel itself, but also the form and like what you're actually saying.
Yeah, I think you need to meet people where they're at. Ultimately, like, I think there's a lot of fear around digital first, but actually if people don't want to do digital, they don't have to. I think for us it's about, in general, I think it's about reducing friction. If there's more clicks and steps before doing things, people are more reluctant to engage. And I think it comes back to the language again, because especially in our industry, we don't see many people log in again. If they don't log in again, you've pretty much lost them. You want them to engage the first time. So even things like let them know you're there. So as an example, when they log in, if you click on an outcome, click on, let's say, painful and easy one, but don't complete it, we'll follow it up and say, do you need any help? With a link to that page within an hour. And I think letting them know you're there, and it's the same with like the content of a strategy, a 90-day strategy will typically have a different theme throughout. But we can see when people have clicked on something, and not just that, just opened an email. We say, okay, hi Matt, we noticed you clicked on, you're struggling financially, you might not want to speak to us. Fine, speak to any of these, let us know what's going on. And building that rapport and trust is really key, because otherwise we're just another email that's popping up, or just another person demanding payment.
I suppose that's interpreting the data and then trying to almost like take that upstream as far as possible, so you're getting as early enough notice almost. I mean, I was going to ask you that just from a lender point of view. Like, do we do enough upstream, and do we do enough sort of thinking about that, and how do we do more?
No, we don't. That is the short answer. So it all comes back to trust, but trust needs to be earned. You can't just expect the customers to trust us just because we're a lender or a debt purchaser or a debt collection agency. We need to prove to the customer that we deserve that trust. And that all starts at the beginning when you first have that first touch point. So if you think of the typical credit card journey, you can apply for a credit card, get approved, wait for the card to arrive, make a purchase at the store, get your credit card statement, make your direct debit payment, and you still don't know how much it's going to cost. So we've almost historically started that relationship with the customer without being transparent, which is going to reduce that trust that the customer has with the company. And then we expect them, when they're in trouble, to come and tell us everything that they need help with. It's not going to work like that. It needs to work both ways. So it's what we're trying to do at Fairlo, not doing it perfectly, but we're attempting to, is how do we be more transparent up front, so that then ultimately the customer will be more transparent with us further down the line. And if we can be flexible within all of that, well, that's ultimately going to help.
How do you, I mean, this has always been a question, I suppose, in collections, which is collections is sort of seen as like its own department that usually sits in a different city, sort of like, on the industrial estate rather than sort of like downtown in the glitzy building. But how do you influence that going upstream? So this might be at originations, or it might be at, within customer care, those kind of things. That's when the trust is kind of built as well. And how do you sort of envisage, I suppose, influencing those other stakeholders to make sure that they're doing that, and it's a joined up journey back to the collections piece?
Yeah, I think that comes down to your company culture and how have you instilled the ways of working, so that the different functions aren't siloed, and that actually marketing can see that actually the old adage that a good collection strategy is a good marketing strategy. Like, if you can get that joined up so that people are talking to each other in the business, it's still a tough problem to solve, but it's going to be much easier than if everyone's working in silos and just looking at their own metrics in their own little bubble.
Yeah. Okay. I mean, Neil, I suppose we didn't talk a bit about, I suppose, there can be, I mean, Shiraz, who's here this morning, was on the stage this morning, was talking a bit about behavioural type characteristics, and often we're not quite as rational as we like to think we are in terms of making decisions, those kind of things. I mean, are there sort of like emotional or behavioural triggers or things we can do to really sort of highlight that engaging is the right thing to do? I mean, there are any sort of like, more lateral kind of thinking to say, well, look, this is there's the behavioural science type stuff that's out there as an example we've been chatting about. But are there other ways of approaching it that can be used to then sort of generate engagement and sort of talk to that human side of things rather than the pure sort of academic, mathematical side of things?
Brilliant question. Yes, I would say obviously there are. We've put various nudges within our digital journey in particular. So again, going back to comments earlier, so our average setup value back when I joined was £13 per customer per month in a digital channel. And the rest of the organisation was, dare I say, quivering around why the hell are we investing in digital and marketing when actually we can collect a load more by being on the phone. And I remember having my first town hall meeting, if you like, with the business, and the only people who turned up were the guys from the contact centre, which were coming there to go, "Are you doing me out of a job?"
Yeah.
I said, no, but we're going to shift everything to digital. The digital channel now brings in, I think we're about £27, £28 per customer, way above the contact centre. So, but we've put some behavioural nudges in there, and if anyone wants to talk about those separately, I can go into the details of them. Within the digital journey to encourage quicker payment and higher payments, and it's worked. So that's that. And I think also that one piece maybe touched on from a social media perspective that we're learning at the moment. So hands up, going to do another hands up. Who's on TikTok?
No.
Right, 5, I think, out of the whole room. So
I was going to say,
we've brought in...
who's on TikTok and then is never not on TikTok?
Yeah,
That's the other problem. So.
Well, we'll see, we'll find out. So, and the reason I call that out is, so we've brought a social listening tool in. We brought it in January. And it's looking at TikTok, Reddit, Facebook, Instagram, blah, 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 all the channels that are out there to understand what is being said about our brand. And pretty much half of the brands in this room, actually, we're keeping a listen on. And we've got, there's some influencers out in TikTok who are targeting our part of the industry with positive and negative sentiment and some neutral in there. And we found people who are talking about our brand, and it is 20, 30, 40 posts every single day, particularly in TikTok and Reddit, where that is getting reach of hundreds and hundreds of thousands of people each time it's posted. So we're sitting there hoovering all that in and going, okay, how do we react from this? From a, you know, do we want to boost any of this kind of stuff and engage with the guys who are positive about our industry? There's a lot of people out there going, do you know what? Just engage with Lowell. They're good guys in this part of the sector. You've got some people, and I will share this in the room, this is absolutely crazy, who pretended to drive over our CEO on TikTok, and it got 150,000 views. So we now sit there and go, okay, what's the legal process when we want to sit down and have a conversation with them? So engagement is way beyond trying to, you know, the letter, the SMS, things like that. I personally think it's what's going out in the broader ecosphere that we need to manage.
So how aware of that do we need to be, I suppose, in terms of the influence it has? I mean, I suppose that's the point, isn't it? This is sort of happening on people's screens, sitting there in the, you know, in the pub or in the coffee shop, and it's actually influencing what they think about you as a company. I mean, how much of it, how pervasive do you think that is in terms of being aware of that? Because what that means for us in terms of engagement, should we then need to talk with people?
Yeah, so really interestingly, we have, particularly in Reddit, of all the platforms, when people are anti our brand, there's quite a few people who jump back on it, and without us even prompting them to go, actually no, if you do ring them up, or if you do go on their app, or whatever it might be, it's dead easy, and then the letters and things like that stop. So we're keeping, it's only been a few months, but we're keeping an eye on that, and then I think we'll decide on what our social media marketing strategy looks like. So we've got one in place at the moment, but going back to the point around TikTok and Reddit, when we first leapt into social media advertising, we went down the Facebook route. The amount of engagement, and we class engagement as clicks, shares, reposts, however you want to describe it, 85% comes from TikTok. And we thought it was all Facebook, and it's only 5% in Facebook. So it's knowing which platform your brand has been talked about to then react to it.
I have to say, it's the first time I've heard Reddit mentioned, so I thought that was much more of a North American thing. Yeah.
All the young guys in my social media team were like, we need to get onto this. And I was like, all right, okay.
Okay, well, they know. They know. It makes me feel old.
Speaks to the young guys.
And
it will depend a little bit on who your target customer is, or not. Maybe not even your target customer, but who's your actual customer. Because depending on that actual customer profile will depend where they're talking as well. So that will vary a lot by business to business and in terms of how they want to engage as well. So we've got an ongoing debate internally that we're very digital first. I'm all for going more digital because I hate having to phone up a company. It's my pet hate. Because, I won't go into that. And we've got other people in the business who say, no, we need to do more, so, have more of the human touch. And actually, we've had this debate ongoing for a while, but actually there's no right answer. It just depends on the customer and the individual. So I think having a balanced approach to engagement where you can be, as you say, where the customer wants to be, interact with you at time, wherever. That's the right strategy. There's no right or wrong. It's just being there for when the customer wants to engage.
I suppose it's about having the channels of choice. And John, I can see you want to make a comment, but I'd also bring in, you mentioned in the piece around web content accessibility guidelines as well. That was kind of interesting as well in terms of making sure that we think about digital, but also making sure people can access it, making sure that, as well as the channels as well. But go ahead with your comment.
Well, we'll do another quick straw poll. Who's heard of WCAG?
I have now.
Is that 2? So it's safe to say that in any online customer-facing content that it's not WCAG compliant. So WCAG is it was developed by the World Wide Web Consortium as a standard, similar to ISO in many respects. But WCAG stands for Web Content Accessibility Guidelines, and the standard is AA standard. It's independently audited, but it's ensuring that your customer-facing online content can be accessible by people with disabilities. Now, we all train vulnerability into our agents, but 70% of our customer interaction is online through self-serve portals. So how do you ensure that your online content covers vulnerability? It is a hard standard. We have it because we do a lot of work for HM Revenue and Customs, and it's a government requirement. But in March 25, the FCA, in their latest paper on consumer outcomes, for the first time, they mentioned WCAG as good practice. So if you haven't heard of it, if you have online customer-facing solutions, then I would suggest you start researching it. It's expensive and it's hard. You can do an online tool as a first assessment, and that showed we were 95% compliant, and we were lovingly told by HMRC to just ignore it, because when we had our first independent audit, we were 40% compliant with 120 different changes we had to make. We just renewed it, and the standards increased even more, and there were an additional 40 changes we had to make because of increases in the standard. But it's all about making online content accessible to people with disabilities. And if we're in the collections game, I think it's key critical, really do.
Neil, did you have a comment on?
Yeah, I was just going to build on what John said there. It's, we've brought a tool in, and I'm happy to promote them. I did it at TransUnion's conference last week, called reciteme.com, or I think maybe .co.uk, and that builds on the accessibility guidelines, where you have a tool that's at the bottom, at the top of your website, and it can go in there and immediately change font, colour, language, imagery, anything that is in that WCAG requirement. I think we're at AA. We're thinking, do we even want to go higher? But I was a little bit sceptical about it and thought, is this going to damage the customer journey or not? And people go in and get stuck. But actually, we've seen a really high uplift in it, and even just even just learning what languages people want the website to be in has been a massive insight. Bengali is in our top 5, which was wow.
And I suppose I'll just take a step back and go back to this, I suppose, digital versus human kind of conundrum or question that's out there. And I suppose, Arren, I know you've got both, but you do both now. I suppose it's like, how do you decide which one works when, and sort of moving seamlessly between each of them? So like when they need to call in versus, doing the digital outreach. I mean, there's a balance there, I imagine, in terms of having a human at the right time versus being able to do it digitally, and more digital first as well. How do you think about that balance, and what's the most efficient way of doing it, but also the most effective for the customer?
I've come back to the same thing, meet people where they're at. Ultimately, like, we use AI on our customer content that comes in, so we sentiment score it all. So if someone's unhappy and they're requesting it, we'll do it straight away. But ultimately, we let them choose. We have every channel going, and they can fully self-serve, and they don't have to do that. I think they go hand in hand. We've just proven that the mass majority is digital, but we're not naive. People do, we do have calls, but probably our third biggest client, we always get requests for 10 vulnerable calls a month, and it's always a bit of a joke with them now. We're like, well, we had 3 calls, and none of them were vulnerable, so what do you want us to do? We can't really give you what we've not got. It's, well, is there something wrong? Well, you've got access to our portal, you can access anything you want, and if it's not broke, don't fix it. But for us, it's just, you need to be flexible. Don't put friction in. Don't force people down your own journey, because I think that's a lot of the issues on some of the stuff I see where engagement's really low down. Like in our early days, the amount of times we had to prove ourselves on some rubbish second placement, pre-panel stuff, and then our engagement rate was through the roof. And obviously it goes down to language. That's a massive part of it, what you're saying. Think of utilities as a really easy example. There's always something wrong with the bill. Tell us what's wrong. It's incorrect move in, move out dates, estimated readings, all that sort of stuff. We don't say you need to pay. We say, look, tell us what's wrong. We present the facts. Here's what you can do. Tell us what's wrong. And from that, we got onto the panel, and we're now perform really well in that particular industry because the engagement rate went up higher because people are now more, enthusiastic to engage with us because we've actually gone, tell us what's wrong and let's resolve it. So I think, again, you just meet people where they're at, really.
I mean, some of it comes back to what we heard in the previous session, I suppose, around, it sounds like, personalisation, right? So how do you personalise your communication even through digital forms, right, rather than just being generic communication?
Yeah, I think, I always think back to, so I've been in debt, by the way, so I've been on both sides, it's great. But yeah, so, we're inherently avoidant. When it's something challenging, we are inherently avoidant, we're human. And often, Tom was our ops director, he creates all the strategies, but kind of like put questions out there. Is there something wrong? Do you need help? And then you don't know what's going to stick. You keep throwing mud at the wall. Will it stick? What they're going to engage with? You never know until they engage. If you keep going the same thing and you're not paid, this is what the consequences, blah, blah, blah. Guess what? They're burying their head in the sand. And for us, it's like just trying different things, but, always trying different things and using, plain numbers and plain English and that sort of stuff. Making it, I think the reading age in the UK is 9. That sort of stuff's really important because you don't know what's going to make people, stand up.
And building on vulnerability is quite a few vulnerability types. They actually get more stressed when they have to ring someone up and put their emotions and the situation to the forefront. It's actually easier sometimes to deal with things in a self-serve basis because they don't have to go through that emotional turmoil of explaining why they're struggling. They can go and fix it themselves. So I think it's interesting that the old way of looking at the world is that actually vulnerable customers will come through and want to speak to you on the phone. Hence why you wouldn't need the 10 calls a month. When actually you might find that a lot of them actually don't want to phone because that makes, brings out their stress response even more.
And I think also you can utilise a lot of data out there. So we won an award with Eon 2 years ago now, and we were so I've managed call centres before, I'm sure you will as well, John. When you've loaded a batch of cases, especially at the end of debt, the first people you hear from, you're insolvent, you're vulnerable. Well, it's a terrible outcome for one. And it just causes distress and anger. We're like, well, how can we fix that? Well, you've got things like VRS and loads of other data sets like day zero. Scrape the insolvency register. If they're bankrupt, don't speak to them. They don't need to hear from you. Most clients don't have that functionality. We can do that, so we'll let them know this one's IVA, this one's bankrupt, whatever. This one's with VRS or debt respite scheme, what the vulnerability is. We ring fence it. They get a bespoke strategy. We let them know we're aware of it, and they get the breathing space. And even like that engagement went up by 15% because the customer knows they don't have to tell us again. They can just speak to us and they know we're aware, and stuff like that. You can again building trust, which again is hard in our industry.
Something you raised earlier though was kind of interesting in terms of what clients are saying, so particularly in your business. And we're using some of the traditional measures like number of calls, call audits, those kind of things. But do you think, particularly as we get into this more sort of hybrid digital kind of world, I'd say that we need a different set of measures. So rather than we used to look at things like, I suppose the things like average handle time, calls handled, those kind of things. Do we need to get into different types of measures, even things like quality scores? Do we have to have a new suite of measures to measure the effectiveness of our collections process? And if so, what kind of are they? John, what's your kind of thoughts on that?
All clients measure us on you've got the qualitative measure and then the quantitative measure in terms of QA and collections. But what we're finding is with in excess of 70% of customers now self-serving, it's driving up the average handling time with the agents. Our average handling time's doubled in recent years, and the agents are having those difficult calls they need to have, but it makes the QA measure that much more challenging. because they are no longer the very quick, simple, yes, we're going to make a payment call. They are the difficult calls, but they're the calls that are the right calls. I don't want my agent sat there taking payments all day. I get upset if I see that. They should be there having the conversations with the people that need to have the conversations. The yin and the yang of that, though, is that you have a situation where there's stress on the agents. So our mental health care of our agents increases year on year. The number of suicide, potential suicide calls they're handling on a weekly basis increases, as you find that customers have no other, they find it difficult to reach out somewhere else, and because they're talking to an agent on the phone, it all starts pouring out. So the QA measure is I think even more important with the clients, and it does surprise me in this day and age that there is still that collections target in there with most clients, and you are still predominantly measured in terms of allocation based on collection results. Yeah, and we're still rewarded on a collection commission basis.
But I suppose if we have less manual calls, the calls are more complicated. It's on a smaller population, and it's going to be struggle to meet that. I mean, do the clients need to think around different measures to measure you on? Because it's not necessarily representative of the whole population, but it is representative of the risk-weighted sample, if you see what I mean. So it's an increasingly risk-weighted sample that you're now measuring on.
That's correct.
Do we need to think about like other kind of outcome measures to other than just what we'd not typically look at? And in the background, we've got consumer duty board reporting and those kind of things in the background as well.
And complaints, and of course they do their own risk analysis on the business. But coming back to behavioural science, in terms of encouraging more to self-serve, we're finding that the decision action gap is all driven, of course, by friction on the self-serve portal. But there is still a big population out there that I think are very suspicious of engaging online. And you have this scenario of they're suspicious. If you haven't got the actual online interaction right through your portal, then you have almost like a confirmation bias. You then move on to this ostrich effect of, well, I'm going to put my head in my sands and I don't want to engage with them. And then they go back to the status quo of not engaging. The behavioural science aspect, I wanted to make the point earlier, is key to how DCAs run the business. But back to your point, yes, clients are increasingly finding different ways to actually measure us as DCAs and to measure our performance with more and more non-collections and QA elements coming into it. Yeah.
I mean, Matt, what's your kind of view as sort of your position in the industry, I suppose? I mean, be able to look across a wider kind of set, and including suppliers as well. But.
Yeah, I think it links into consumer duty nicely, because a good outcome for each customer might be slightly different, and you need to balance the good outcome for the business with the good outcome for the consumer or the customer, which may or may not always be aligned, and it's how do you balance that. And I think the beauty of self-serve and the more digital, the more automated collection processes means that you can spend more time with those customers who need it, and actually the collection rates of those agents then becomes less important, because actually the value to the business isn't necessarily, you've been able to collect your salary this month, well done. It's actually you've been able to help these customers, which helps build our brand or the trust of consumers in our brand, which then helps our marketing, which then helps the business. It's all part of the same flywheel. You don't need to directly focus on the collection rates of a particular agent if you've got it balanced with everything else. Right. Obviously, ultimately, we're all businesses and we need to have a certain collection rate, otherwise we won't have a business. But you can balance those metrics depending on the situation the customers are in. Okay.
So sort of like that kind of balance, really, I suppose. Neil, I wanted to talk a bit about new channels. So I know you talked about social media and sort of monitoring social media, but what do you think are some of the new channels that we've got to think about? So we've gone through digital engagement, that's sort of been happening with digital portals. I mean, is there anything new you think that's bubbling, or is it just sitting within those existing channels we've kind of got? Because it does seem like it's proliferated the last the last few years in terms of like many different channels?
Great question. I think it's still the core channels that are out there. So again, going back to when I started, I had to convince Colin, our group CEO, that we should invest in an app. And we sat there across the table. I had my phone open, and I left it so that the screen was on, so he could see it all the way through the conversation. And he was like, I've always thought we should have an app. Why do you think? And I said, well, my gut feel was this part of the sector has, before joining it, has a problem with getting customers over the first 2 or 3 payments. And generally, once those first 2 or 3 payments are made, the plan gets cleared off. So my view was you can re-engage people through an app, and that will become more dominant than your website. Thank God I've still got a job now, because that has reigned true. We've had 750,000 downloads of the app, I think, since we launched it a few years ago. And I did say to him at the end of the meeting, did you notice any of the apps on my phone? And he said, no, I didn't. It says, people will be fine about having a debt collector's app there. Now, it actually collects at a higher volume, higher rate, higher ASV than the website does, which blew our minds. But one really interesting piece, and I think this is more from a macro consumer behaviour perspective, just given we talked about our financial vulnerability index, didn't we? So please go and have a look at that if you haven't. But vulnerability in the UK now is higher than it was at COVID. So making sure that you've got the options available for customers. We launched Apple Pay and Google Pay maybe 2 or 3 years ago, and the amount of customers who choose that as a one-off payments channel compared to setting up a plan is absolutely extraordinary. And whether they're setting, something in their calendar to go, right, I must pay Lowell on this day or whenever, there's no DD charges or anything like that. We don't have CPA in there because that was a channel that didn't work for us. But one-off, just making it really, really simple for customers is the obvious one. Now, where we go in the future, with some of the AI platforms that are building, and so everyone's seen what Sir Johnny Ive's new announcement. So go and have a look on BBC today. There's going to be some new products coming out that I think will probably, dominate the app and website world in the future.
This is the chap who used to be at Apple, right?
Lead designer at Apple. He's now sold his business for $6 billion, I think it was. And it's heading into
What's the benefit of the app over a website, I suppose, which can almost look like an app? I mean, so is it because you get notifications? Is it functionality? What are the key features you think are important that will drive kind of traffic?
Yeah, it's the notifications. I think we've built in there as well free credit scoring. So we work with TransUnion on that. We've tailored it going back to the reading age. The average reading age of our customers is 7. So we took TransUnion's content and put it through our team to bring it down to the level of a 7-year-old's comprehension. 25% of all our customers who use the app use the free credit scoring, and we can give notifications to say your credit score has changed, come back and see what's happened. More often than not, a lot of our customers come in to ring us or go through the app to engage because they realise their credit score is absolutely ruined and they want a mortgage or credit.
Yeah, I suppose, Arren, come back and just digital experience. I mean, what are the elements of digital experience you have to make it sticky? I mean, it's kind of, when you're in the debt collections world, I mean, people don't necessarily want to engage with you all the time, but you want to try and do that to build trust, I suppose, and get them to come back and those kind of things. I mean, are there any what are your thoughts around how to build that experience from a digital point of view to really try and keep that engagement, keep it going? I mean, there are features that you need to put in or different approaches?
Make it easier. I think it's also, we don't have any bots customer facing. I don't think we ever will. When we first launched, we were like, people will not receive that well. We don't have a phone. We got told, I can't tell you how many roundtables me and Dan got hammered at, thanks to Dan's marketing largely. But we got hammered at, it wouldn't work, it's too friendly, people won't like digital only. We've dismissed all the myths. I think ultimately, create less friction, make it easier. Don't put a bot on the front of it. Be honest, our second most popular channel is WhatsApp. We don't send WhatsApps. That's always surprises people. After email, it's WhatsApp. that's customer that's engaging us, and then we'll come back and say, it's not an auto-response service, we'll be in touch within 24 hours, which we are. And that works really well, because I don't speak to anyone on the phone apart from my mum and maybe 2 of my mates that are funny, because if someone's ringing me, I'm like, what's wrong? Something's wrong, even Dan. So yeah, I think like the convenience of that is really key. And I think the other side as well, even like conversational SMS, people might not be on WhatsApp, they can just text a number. And I think for internally, if you have all that system in one place, that's really helpful as well, because people are, we're all so impatient. I hate queuing for stuff. And if people come back to you pretty quickly, then you're a lot more reasonable, I think.
So I'm thinking here, is it there's a balance there between making your digital experience sticky, I suppose, which helps with trust and helps with engagement, versus making it quick to solution, and it's almost like speed to solution, so getting people in and out as fast as possible. It feels like there's a balance there we've got to kind of make for the right thing at the right time. I mean, John, I don't know what you kind of think around that in terms of maybe in the collection space it's just around how do I get customers to the solution as quick as possible so they get what they need.
We analyse our key collection drivers because we're digital first. In the main, there are some clients who it suits them better to be traditional first. But we're not selling cans of beans. All strategies are different. And the biggest example of that I can think of is it's a global, purely online trading business who give us 100% current verified emails, 100% current verified mobile numbers. But if we don't dial that client, our scorecard performance drops significantly. They are very reactive to telephony. And it's almost like there's this digital frustration or digital overload with them, where they're reacting to more traditional methods than they are digital. So the key to it from our point of view as a debt collection business is to analyse what the key collection drivers are and work to those, so that nearly all of our workflows are bespoke for clients because they're based on what the debt type suits.
And that might be different by client or by customer.
It's different, not just by client, but by industry sector as well.
Yeah.
It's just to build on that. So in Sweden, we've been experimenting with outbound calls, and customers have reacted really well. So we're a digital-only application, but they've actually really enjoyed hearing from us. Like, oh, thanks for the call. It was really, really good. They weren't expecting it because we're completely digital in 90% of what we do. So I think being able to mix that up a little bit also is really welcomed by customers as well. It doesn't need to be necessarily the strategy to go all in on one or the other. You can blend them together.
I mean, for that particular client I mentioned, before FCA started to regulate the industry in 2014, of course, doorstep debt collection was very common. And I had about 1,000 people on the door back then. But this particular client, we're about to actually start a pilot on the doorstep reconnection. This is a purely 100% online business with great data on the customers, but we're pretty confident that we'll get a good reaction from it because I say it's digital overload, and they react more. We're almost what we're seeing is almost like this coming back round to traditional methods still having a place, but digital first is definitely the way forward, without question. Yeah. On a cost play alone.
Yeah. Can I just add to that as well? So we've been using some research recently, which probably mirrors what John's saying there. Is if you're a brand new to Lowell customer and you've never been in debt with us, you would hope and assume, given all the experiences that we've built, that you would go to digital first. But again, going back to my point at the very start of the session, still the deep mistrust in the industry. Half of those customers who are brand new ring us, and we're sitting there going, well, that's because they just want to know the human element is at the end of the telephone, or it's a complex situation. But if somebody's got what we call a crossover account, where they've been with us in our contact centre and then maybe got a digital account in future, that goes absolutely through the roof. So you've got to make those first interactions really, really strong, but then get the encouragement to go on to digital.
How do we think about contact via channels, though? Because we always talk about it in terms of like digital's effective, or door-to-door's effective, or outbound's effective? How do we think about it in terms of like trains of contact as well? So the fact you leave a message might mean that your digital contact is then effective, and it's not one or the other. It's actually the chain of the interactions. I mean, how do we start sort of like? I mean, we always tend to talk about it in like singularity rather than being a chain of events, and the chain of events can actually be quite important sometimes. It feels.
Lots and lots of champion challenging.
Yeah.
But ensuring that you're actually making baby steps so that you're not confusing the outcome with many changes. It's make a change, champion challenge, see if it's effective or not, move on.
But for example, so like leaving a message might drive more digital engagement, for example. So you look at it in terms of like, I mean, you look at it in terms of like how those get linked together. I mean,
yeah, well, we do run digital cycles of activities. Those digital cycles are all self-reliant. In some respects, they're self-affirming. So if you're receiving an SMS and you're working for government, then of course there's so much media out there about scams, etc., as far as government debt's concerned. But that SMS is then reinforced by a telephone contact, and is then reinforced by a letter. They don't allow email, by the way. So when you have the cycles of activity, they become self-affirming, and they do tend to move the customer away from the initial reaction, oh, is this a scam? Because if I got a text from somebody saying they're collecting debt for HMRC, I'd think it's a scam.
yeah.
It's the same as marketing. So you don't necessarily, the customer doesn't see you once and then go, okay, I'll buy that product. They might see you 6 times over the
I
course.
was about to say that.
Yeah.
7 to 8 points in it for the engage.
It's exactly the same with collections potentially.
Yeah, I think everyone needs to be cognizant that there's probably 4 or 5 other people speaking to that customer about the debts. So we try in some areas, going back to the kind of A/B testing champion challenge, however you want to describe it. I try to encourage the business to have a little bit of patience with some. So we have a lot of customers who come and hit our website who do absolutely nothing. And I, as running a digital channel, I'm actually okay with that, as long as I know in 90 days or so they come back and do something. Because for the vast majority, they will hit that website and they'll look, go, right, is this debt mine or not? Yes, it is. I've confirmed it, but they can't pay it right now because of financial circumstances. So there has to be a little bit of an element of patience, I think, in our sector.
But it could also be a bit like purchasing, going back to marketing, which is I look at it, I think about it over the weekend, I get reminded about it, and that's when I then take action rather than doing it instantly, right? And we get caught into this like trying to do things instantly. It feels like a little bit.
We tried something different, to John's point, like Champion Challenge, we always do that, try different stuff. We did a neurodiverse email, and the reason I can't stop bouncing is we've got ADHD. So we tell people what we will do, what we won't do. We'll be in touch. And we trialled it on the same client, different cases, obviously. And this one said, we'll be in touch. And we followed it, I think, within 72 hours. We got very little engagement or responses. And we were a bit worried at first, but then we told them not to do it all, but they can. And then this one here, where we didn't do that, we got typical engagement, typical money. That ended up overtaking. And I think it was a better way in. So now we've fully rolled that out now, because it just, I don't like big blocks of text. I hate it. In fact, I like to just show me some nice emojis and stuff and make it easy to understand. And I'm like, all right, okay. And at first, yeah, we were not panicking, but you don't really know until you know. You've got to try. Yeah. And I think like doing that and being open to that kind of stuff really helps. And even like emojis and the color templates and all that sort of stuff. There's always more than one debt. There's loads. They'll have so many emails coming into their inbox. What are they going to engage with? And it's about doing that, and that kind of disarms them in a lot of ways and just gets them to engage. And that's the hardest thing, I think. It's getting the engagement. Once you've got it, what's the best payment plan? The one they stick to. You can try force people down that avenue. My time on the phone many years ago, or managing these teams, is that culturally, if you force people to focus on money, they might set up a plan. The customer will either pay it once and never speak to you again, or they'll never pay it and never speak to you again. So it's like getting that message right at the start. You want to keep the plan and keep going.
Yeah. The question on here is, how do you ensure the right outcomes are provided where customers self-serve? So we talked about self-serve then. I mean, how are we measuring those outcomes? I think that's kind of getting to, I suppose.
Yeah, I can jump in there. It's tricky, but with self-serve you get a lot of data as well, so you can kind of track them through the life cycle and see how they go. But it is hard because one outcome for one customer might be good or bad, but for the same outcome for a different customer could be the opposite. So it's hard. But I guess the same is with a phone interaction. You'd have exactly the same problem as well.
I mean, just one example to support that, we have minimum repayment levels on the self-serve, because when somebody's offering below a certain level, you know they've got issues and you need to talk to them. So the plan is declined with a message saying, please call us. So there are various ways you can introduce into self-serve protections to ensure that the customer is being checked for vulnerability. But when a customer does self-serve, though, it is difficult. The online tools are there, INEs, etc., and disposable income, etc., but it is difficult.
Yeah. So I know we're going to talk about AI in the next section, but like when we talk about engagement and sort of like designing strategies around that, I mean, like how could sort of like AI and sort of like automation kind of help with that? I mean, how are you guys sort of like thinking about that? Maybe Neil goes first.
Yes, so we've recently appointed a new head of AI in Lowell. One of the first findings and what we're working through, and I was blown away by it, to be honest, and we're happy to share that we've used Copilot to do this, but we've fed Copilot with all FCA regulations, conc and all that kind of stuff, and then asked it to write letters on our behalf, and you can then feed it with what reading age do you want it to be aimed at. So, and then we can compare it to what our in-house copywriters would be doing. Now, the copywriters are, scared shitless that they're probably going to lose their job, but you say, no, this is to help you. We feed you with the brand, tone of voice, everything that's in there, you can just pump it in, and then within a matter of minutes, we had letters that were coming out where you go, actually, if that is for a reading age of 6 or 7 compared to, 18, it's very, very different. And we've also got a customer panel at the moment. It's about 5,000 people, I think, who are pretty regularly engaged that we can go and test all these materials with. But I'm already thinking now, there's tools out there where I can almost replace the customer panel with AI tools to go, is this message going to hit the mark? Now, my nervousness with it is you lose creativity and, stand out, and there's almost all the brands gravitate to the same thing. So AI has to be there as a supporting tool rather than replacing your people.
Yeah. And Matt, what's your kind of views on, particularly from an engagement point of view? I mean, how do we sort of incorporate some of these new thinking?
I think the tool that you've built, you should send to the FCA to translate conc rules into the reading age of a 6-year-old. But in terms of use of AI, I think is going to be super, super powerful because it will make it much easier to be able to understand which medium of communication does the customer want to engage with, at what time and when, rather than trying to do that in an automated way at scale is really, really hard without some sort of model, like an AI model, to be able to do that in real time. And it'll be able to take the sentiment out of the emails or the communications to then be able to drive, for this customer, this is the best way of engaging with them. I think if we can work out how do we harness that, that's going to end up with much better outcomes for both the business and the customer.
Yeah. Arren, and what's your kind of view on the work?
I've seen a lot, probably 3 different firms offering the agent AI. Some of them pretty terrible, and the other 2 are pretty good. I think we've been discussing it, not anytime soon, but possible solutions where it can fit into our journey, because I think it might be Mega AI with Healthy Homes. They played a few things that we listened to, and their CSAT scores are really good. The customers knew they were speaking to a bot and they were vulnerable, and yet they felt comfortable. And some comments about them feeling quite freeing in a lot of ways, that they weren't going to be judged by a bot, and the bot was good. So I think there's opportunities for that. There's also things like, broken payment strategy, and obviously we follow it up, text, email, letter, call, but we think it could work in there. So I think there's different scenarios for that. I think the other side of it is, which is something I've been thinking about the last few days, really, just there's so much misinformation on the internet, and one of the things we launched last year was Let's Talk About Debt. It was highlighting the CSA's campaign, because we were like, most people don't understand what it means when you're debt. Like, everyone thinks we're bailiffs no matter what. And things like can't pay or take away isn't helpful. And if you go on TikTok, I don't go on TikTok, but the stats are like 60% I know you'd laugh at that. 60% of it is misinformation. We're like, well, how can we change that? So, like as an example, we went to a local family support hub, and these are people that are advising financially, local families that are struggling, and they didn't even know what their rights were when you're dealing with a regulated firm. So that was quite nice. But I do think a bot could come quite good, where it's customer facing, where they can ask questions of what their rights are. Because I think when people have the answers to worries, they'll engage. But then you're getting a bit too much on the advice side. So it's a bit of a difficult one. But I think that could be the future, because it's developing so quick.
Yeah. And John, how do you feel about AI engagement and
agent augmentation? I think no-brainer. Customer facing, you've got to bear in mind the FCA famously say they are technology agnostic. So whatever is built for customer facing has got to make sure it takes into consideration everything that's in consumer duty and everything that's in conc. And it's on your head if you get it wrong. In addition, when building AI models, if it's customer facing using customer data, you've got to be really careful from a cyber security point of view of the journey that data is taking around the world. So I think it's something to be approached very much as a caveat emptor, buyer beware. But from an internal agent augmentation point of view, and knowledge hubs, I'm pretty excited about it.
Yeah, well, we'll talk about that a lot more, no doubt, in the next session. But just to finish up, I mean, where say the same question we've asked all of the different panels. I mean, where do you think we'll end up, or what do we need to watch out for over the next 6 months between now and the November session? I mean, what are the areas you think you've got an eye on, or areas that you think we've got to be focused on? Do you want to go from the end?
Cyber security.
Yeah.
We've seen what's happened to M&S.
Yeah.
And co-op. That's through user error. We're only as strong as our weakest link. You may or may not know there are 2 UK DCAs that paid ransomware over the last few years. So we will, as DCAs, we all hold disproportionate levels of customer data for the size of the business, so we become targets. We overspend on our cybersecurity because it's a constant threat. So I think over the next 6 months, one thing to think about is cybersecurity in this industry, because we're all targets. And when we look at the sort of attacks we get overnight, which, by the way, the sort of pen attacks that we get as a small DCA of 10.5, 11 million revenues, you're talking in the hundreds of millions of attempts that we fend off every day. It only takes us to get it wrong once, and then we've got a big problem. So cybersecurity.
Yeah, I was reminded of one of the cybersecurity ones I went to. One of the weakest links can also be our people as well, in terms of like
people,
clicking and
well,
phishing.
That's M&S, yeah. That's what happened to them.
It's so easy to happen. I mean, Arren, I mean, what's your kind of view over the next sort of like 6 months plus? What's the focus, or what have we got to watch out for?
I think adopting AI in customer-facing things too early. I think we've all seen the news about a certain huge firm backtracking quickly on something. I think if you think back to digital back in the day, it was implemented as a cost-saving exercise, and a lot of it was rubbish, and it still is to a lot of extent. And I think we're seeing that with AI already. Like, people are trying to adopt stuff too quickly. And to John's point, you'll always need a human. I think with AI, something we're building, or continue to build rather, is that you can get stuff that'll help you along the way to maybe generate a message, but you don't send it. And even just simple things like ring fencing the account is a better outcome for the customer if you can get them to the right team, the right outcome. But putting it in front of something when it's not quite ready, it's not good. And I just don't think it's a particularly good outcome. If you speak to someone and it isn't working, like how often are we on these chat bots on these banks where you're just not getting where you want, you just give up. But imagine if you're in debt, it's probably going to be even worse.
Yeah. Matt?
I think for us as a lender who's at the start of our journey in the UK, a lot of it's going to be around making sure that the engagements that we do have with customers go well, so that we can build that trust that we firmly believe is the foundation of us having a successful business. And the next 6 months is going to be exciting, nerve-wracking, and full of challenges, no doubt.
Yeah. Key themes, Neil.
Hard to build on those three. I think they've taken all the good ones. I think for us, it's probably just keeping keeping mindful of the kind of macro environment where, as I mentioned earlier, financial vulnerability in the UK, particularly in regions, whether it's Birmingham in the northwest or the northeast, where in particular it's going through the roof post-COVID, making sure that you're doing it empathetically and building flexible plan options. Because if a customer trusts your brand ultimately, they will stick with you, as we all know with the brands that we work with. But again, being cognizant there's lots of other brands probably engaging with that individual, but it's the empathy, I think, for me over the next 6-12 months.
Okay, well, fantastic. Well, just thank you to all the panel, so John, Arren, Matt and Neil. Thank you very much for enlightening us on the engagement journey, maximising engagement, so really appreciate it. And maybe just give them a quick hand.